Hello and welcome back to finally another episode of Markets in Turmoil. I've finally been summoned by the markets again as we finally had a strong red day last week after a sort of straight run up in November and late November of around 4.7%, and we finally had a retracement of around 2%, which doesn't seem like a lot, but after not having a solid red day for about a month at this point, it sort of spooked a lot of people. Now, like the previous videos, I'll be talking about the market here and talking about where the most likely next move is, as well as going over a few of the indicators I like to look at, as well as looking at the daily and intraday level. Now, first off, on the daily level here, we see that we did have this really big red candle here that pushed prices lower into two of these moving averages that I really like here. The blue one here is the volume weighted average price, the VWAP, and of course we saw that on Friday. We opened at the VWAP and closed above it, but not before we tested straight onto the 20-day simple moving average, the 20-day EMA, but we closed above both of those lines, and that's considered pretty bullish, leaning bullish at least on the short to medium term. And here are some of the other indicators I like to look at. With this, we can see that if you draw a Fibonacci extension, you'll see that the next likely pivot point or point of interest here is really at the 374 level, or if you're looking at futures, the SPX, probably around 3740. What's important here is that we actually popped up above this red trend line that goes back for a few years now, and we popped up around early December, late November here. And managed to retest it and closed above it. Now, closing above it is pretty important, as if we manage to stay above this line, that would mean a likely movement higher into this area here. Now, looking at these indicators here, with the reversion to the mean from a few days ago, this sort of reset the 2-day RSI here into back below the 30, sort of the overbought range, and into the oversold range. And of course, that whole reversion to the mean was pretty much expected, as we were above this 70 point here in the RSI, which does indicate a overbought sentiment. But for the stochastic RSI, we are also quite below the recent peaks here. And of course, we did see a sort of divergence here with prices heading higher and the stochastic RSI heading lower on both of these peaks here. Now, that pointed to a sort of indicator that we were likely to head lower on the short to medium term basis, and of course we did. Now here with these lines, although they're still a bit separate here, I am expecting the long and short indicator for the stochastic RSI here to sort of curl and point back upwards once we get a chance. Now, looking at the more granular level here with the hourly candlestick chart here, as you can see from the pop in early November all the way basically until December 1st, we were trading in this trading range. It's sort of a box here, and then we did end up breaking higher into December 1st, testing the top of the box and then heading higher all the way until, of course, last Wednesday, the open, before going back down and testing the box again, but we did manage to close higher. Now, multiple tests of this top range here, especially this line here, indicates that we have been able to find a support, find demand at those levels, and that it does show that we're likely going to be moving higher, just because we've been able to not break down back into this trading range. But of course, if you look at this channel here, we have been channeling lower for the past 3 days or so, and we closed on top of this channel. Of course, if we open around here and then continue higher on Monday morning, this channel is basically invalidated, but this was a pretty nice channel to trade in the past week. So basically, this trading range, the trading box right here, is one of my favorite patterns that I'm looking at right now, and it does show that prices are moving higher, and of course this next target here at 374 would be pretty interesting to look at. So basically at these levels, the market has pulled back sufficiently into support and where there is demand, and we've been sort of digesting that demand here, and allowing the markets to reset and the indicators to reset here to allow for a push higher. But of course, the market can be pretty wild here in the past year, so remember to always be nimble, and of course remember to always follow the trend, and if the trend changes, don't really act against it. And as always, stay safe out there.